Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world. Welcome to another international edition.
Yes, those are my favorite.
FNO InsureTech. Yes, that's right. Today on FNO InsureTech, we are, first of all, Lee and I are back from San Antonio.
Yes, we are.
In the beautiful state of Tejas.
Man, there's some good Mexican food down there.
I had some great Mexican comida.
I don't know what that is.
That would be food.
Oh.
Mm-hmm. In the hood.
We shared fajitas and awful service.
We paid $47 for a plate of fajitas that wasn't as big as the plate of fajitas you get at Taco Bell.
No, it wasn't very big. The service kind of went downhill. It wasn't our best experience.
That aside, we loved San Antonio.
Loved it.
Mi amor, San Antonio. Huh? It goes on. There's more.
I hope not.
We saw many friends. We're back from PLRB. For those of us in property claims, PLRB is a big, huge event for us. It's our big event. And our team at Alacrity, we sent about 15 people or so to San Antonio, Texas to attend PLRB. And we had a great time and saw a lot of people that we haven't seen, some for probably 3 years. Right, Lee?
Yes, absolutely. It was wonderful to walk down the halls and to see old friends that we hadn't seen in a long time, but to be able to pick up right where we left off.
Lots of hugging. Today we have with us Andy Yeoman, who's the co-founder and CEO of Concirrus, a really interesting tech-forward company that is going to introduce itself to us today.
Yeah, I mean, Andy's going to come and talk about how they use data and AI and machine learning and how they're changing the world of underwriting in the specialty market. And we're going to get to talk to him about cargo and, I mean, all sorts of things. I'm excited to talk to him because it's a new way to underwrite, and it's a way, he's coming in and changing a process that's been done for centuries and centuries. And I'm interested to see how that's going.
A very interesting episode that we think you're really going to enjoy.
I agree.
So, I have a shout out before we get started.
What is that, Rob?
Our groupie.
Yeah?
Because we can't say our groupies.
No, our group.
We can only use that in the singular. Our groupie. Astrid reached out to me yesterday to share some news.
What was that news?
Her daughter has been accepted and has decided to attend Stanford as a computer science major beginning in the fall.
Wow. Great job. Congratulations.
Congratulations.
That is exciting. That's a life-changing school right there. Big deal.
Thank you for sharing the news, Astrid. And thank you all for being here with us. And without further ado, let's get to our episode with Andy Yeoman, CEO, co-founder of Concirrus. Hey, everybody. We are here with our guest coming to us all the way from offshore, and we'll divulge that location in just a moment. We have the founder and CEO of Concirrus, Andy Yeoman, with us today. Joining us from, Andy, where are you from?
I am from Londonium.
Wow. How fun.
Wow. How's the weather in London right now?
It's variable. Today we've had sunshine and we've had ice storms. So it can go either. It's like one of those genuine 4 seasons in a day kind of things. Yeah. You basically need to take your entire wardrobe with you when you go to the office.
Wow.
Anything could happen.
Wow. Has the weather changed? Is the weather different in England? Like you go to places here in the States, like Illinois, for example, like Chicago. I mean, in the old days, Chicago would have, 10-foot snowbanks every year. And now it doesn't snow so much. Are you having that in England?
Well, it's funny. Let me just say that we grow grapes and make wine in England now that we rival the French with. So we recently made a sparkling white wine, which took on the best of champagne and won, much to their unhappiness.
Sure. I would imagine.
So that probably talks to something about climate change. And if you can start to grow grapes and make decent wine in the UK, anything's possible.
That's like a crazy thought historically, correct?
Absolutely, yeah. It is a crazy thought, yeah. But we're absolutely doing it. That's it. That's basically and making cheese. There's a big cheese revolution going on in the UK at the moment. Lots of cheese that we're beating the French at their own game. If we just bake some decent baguettes, we would never need to cross that channel.
You'd be set and ready.
I tell you, yeah. Give me garlic, give me snails and a baguette, and then that's it. We're building a big old wall in the ocean, and we're never crossing it.
Maybe that's what the three of us need to do on our next podcast: is have a culinary podcast.
I'd be okay with that.
Yeah, I count me in. I'm there.
I do the tasting. I'm super good at that.
I would taste some of it, not all of it, though.
Anyway, enough of that.
We digress.
We do. Andy, welcome. Thank you so much for joining us. You are the founder or co-founder of Concirrus?
There was two of us. There's only one of us left. So I was the co-founder of Concirrus.
Okay. Well, welcome and thank you. What time of day is it? It's noon where I am. What time is it your time?
It is 7:45 in the evening.
Oh my! It looks very sunny outside too.
That's because there's propaganda about it being dark, wet, and rainy in England to keep everybody out.
Let's jump in and talk about Concirrus. Why don't you give us a minute or two on what Concirrus is, what you all do, and what the company's about?
Sure, absolutely. I'll be glad to. So Concirrus is born on the back of two trends that we saw in the market. Number one, that we saw that the world was connecting. And specifically, everything around the assets that were being insured, whether they be cars, trucks, cargo, ships, buildings, etc., they were having sensors and technologies put on those. And buried in all of that data was the behavior of those assets, the how, where, and when they were being used. And candidly, we saw that data was going to be a better source of data for assessing the risk than the traditional proxies that were used and static or demographic information about it. So rather than rating me on, say, how old I am, what profession I do, and where I live when it comes to driving, actually, if I could see how, where, and when you drove, that would be a much better indicator of risk. So we saw the whole connectivity thing coming together with the Internet of Things. The challenge with the Internet of Things is it creates a vast amount of data. Mm-hmm. And actually, the data that you want is buried in that time series. You often get data every second. I actually want to know is what's their rate of speeding or acceleration, etc. So that's where the second trend that we saw coming together was, which is AI and machine learning, and specifically the ability of algorithms to process that data, extract rating factors, and turn that into risk. So again, in summary, we saw a ton of data coming in and a ton of new technology. And our belief was that all actuaries are going to be data scientists. Not all data scientists will be actuaries, but all actuaries will be data scientists. Mm-hmm. So we saw that there was a need in the markets to be able to, firstly, be able to host and house that information, and secondly, to be able to extract insights and turn that into rating factors. So we wanted to connect those two together in the cloud. That's where the name came from, Concirrus. Cirrus being that thin, wispy cloud. We wanted to connect it into a platform to allow insurers to access the power of that. And that's what we've been doing now. We've been doing that for about 5 years. Okay. We have about 25 insurance carriers and brokers as our customers. And candidly, we see our customers outperform the market. If you look at the combined ratios of market participants, let's just say in marine, and then take a cohort, which is our customers outperform the market by 5 to 10 percentage points on combined ratios.
And do your customers tie that back to you and your data analysis?
We would love it if they tied it directly back, because what we could do is go and charge them a whole heap load more money. So I think that in the markets that we see, in the specialty markets that we serve, things like marine and automotive and cargo, transportation, etc., there are external factors as well. So I think it's very difficult to tie to tie things back directly from that lot ratio to the use of one tool. What the data and the tool definitely gives you is a new discipline. So that's really important.
And so they are using this information for underwriting, you said, for specialty type of lines. And just kind of go over that again. We're not talking about just regular homes, right? We're talking about cargo ships and big things.
It is used across property. We'll come to that in a moment, but not so much on an underwriting. That's more on the automation of first notification of loss. But in the underwriting side, they use it on large assets, so things which go in the subscription market, so things like the ocean-going vessels, tracking containers and what's in containers, etc. And as I say, we monitor, by way of example, we monitor every commercial vessel in the world, where it is every 15 minutes. And we turn that into behavior. So how fast has it traveled? Which ports does it visit? Did it anchor up outside a port, etc.? And then the real magic occurs in that we combine, in our platform, we combine the policies that people have written, the claims that they've had, and combine that with those behaviors to then say, actually, these behaviors A, B, and C, they predict the claim. So it means if I see a fleet of vessels offered to me to insure that I've never seen them before, I can go, well, how do they behave? And then what does that behavior tell me about the likelihood of them claiming?
Wow.
And we see those models, as I say, you can stand them toe to toe with the GLMs, general linearized models, that they've been using for years, and they massively outperform them.
Yeah, because London has been insuring vessels for centuries and centuries. They have to have a ton of data. But I guess what you're saying is that in the recent years, through the use of IoT, you're able to even outperform all the data that they have?
Yes. I'm hesitant there because your statement is they had a ton of data. The question is whether they used all that data.
I would say that would be true. Yes.
And so again, the wider trend that we've seen is that, we as an industry, we've changed fundamentally. We've had a situation where we've lived with a paucity of data. We just have never had enough data about the assets that are being insured. And in the last 5 years, that's completely flipped. It's gone from we've not had quite enough data to we've now got way too much data, and we don't even know what to do with it yet. And I don't even know how to get on top of it. So what we've done is introduce the tools that allow people to get on top of that data, understand it, extract meaning from it, and then apply that to decisions. Do that in real time. So we talked about how we can do better rating, but we also do it quicker as well. So,
do you help with the decisions? Like you're saying, you help sort and cull through this mountain.
That's exactly what we do. We are all about, so we're not the system of record. We're not the policy management system or the policy management platform. And we're not the claims management platform. We are a system of decision. So again, if you look at a point of underwriting, our tools will go through an inbox where you've been sent maybe 100 submissions that you need to potentially quote on. We'll sort through those 100. We'll price them. We'll triage that and say, out of those 100, these 5 are the ones you should pay attention to because these will improve your loss ratio the best. And then when you get into those 5, it will say, this is how you should price it, and this is why. The system will explain why it's pricing at the prices it is, and it helps you get to a better decision. So it's a combination of better risk selection and more and operating that entire thing more efficiently.
That is so cool.
Does it also spit out recommended rates?
It spits out recommended rates. It spits out line sizes because we're a subscription market. It will optimize deductible structures for you. So it really helps. The underwriter do a better job.
It's like this really smart person that you have in underwriting, except it never asks for a day off.
The easiest analogy, and everyone gets this, is it's a bit like Google Maps. Okay. So and you think of the journey that Google Maps went on. I'm old enough to remember that you used to have like an A to Z book where you had to look up where you were going. If you're in London, you were a taxi driver, you took a test called the Knowledge. I was very experienced. And then back in the late 90s, along came Yahoo, and they put out Yahoo driving directions. And that was great because you could put in where you were going. and it would print out a set of turnings for you. Yeah, you had to drive whilst reading the turnings. That was, and it would give you some ambiguous things like take ramp to ramp, and if you got lost, it wouldn't help you and things like that. The next generation of that technology was TomTom.
Oh yeah.
So TomTom, you put your device on the dashboard. That was great. Yeah. But then, so if you took a wrong turn, it'd get you back to the route. It would never change that route. I mean, they could have physically removed the road, and the TomTom would still want to tend you down there. And then you got trucks stuck under low bridges and cars stuck in rivers. And people would say, well, I went that way because the device told me to. They wouldn't apply any logic to it. But now you've got Google Maps, and Google Maps is great. It gives you options. It says, hey, listen, if you turn left, it's 1 minute quicker. If you turn right, it's a mile shorter. And you actually, I'm going to go straight ahead because there's a Starbucks over there. Other coffee shops are available. But, I'm going to go that route there. So it gives you choices. And the nice thing about driving with that is you never have to worry about being lost. It gets you there. So our technology is the same. Our technology operates fundamentally the same principle. It says, hey, listen, if you write this business at this premium with this line size and that deductible structure, your loss ratio is going to go from X to Y. But if you write it with this line size and this deductible structure, it'll go from to 89% or whatever. It's up to you. You are the driver here. We are just going to give you the options. If you turn left, it's this. If you turn right, it's this. So we very much believe we empower the underwriter rather than replace them.
Yeah, I would say that absolutely empowers them where they can make that choice. And so we talk to a lot of companies who use IoT in homes and just your regular home. But I'm curious, what data is being captured from cargo or marine vessels? What data is being collected that you can actually use in the underwriting world? I
just want to add to that. You talked about how assets behave. So if you could kind of tie those together, I think that'd be great.
Sure. So the short answer is that, everything about a vessel these days is monitored. Clearly, we know where it is. We can then look at what weather patterns it's sailing through at the time. We can look at what the performance of the engine is. So what's the engine running speed at the time, et cetera, et cetera. And we combine about 50 different data sets about the marine environment. And from that, we calculate behaviors. So a simple behavior could be, hey, what speed is it going at? How many miles has it covered? How many minutes did it sail at night? How many minutes did it sail in the day? We get about 1,500 of these various parameters, from the obvious to the really obtuse. The data science team generates some real strange parameters. So those are what I would call behaviors.
Okay.
The challenge is, as I say, we have about 1,500. The challenge is typically an underwriter might use 5 parameters historically. And you could argue that 5 is probably too few. 1,500 is definitely too many.
Yeah.
So that's where the AI comes in. The second lot of AI actually figures out which of these parameters are useful. And it turns out that actually predicting the behaviors of a cruise ship in the Caribbean are different from a cruise ship in South China Seas.
Right.
And a bulker in Europe, they all use different factors. So the great thing about it is you have this really complex machine learned model that the system can generate, and it's fully explainable. So that's how we generate behaviors, and that's how we use them in the product.
So do you ever look at wrecks or things like that have happened? Like here recently, right? We had a boat in the Suez Canal that caused a lot of issues. We had a boat that caught on fire and took down a bunch of cars. Do you ever take that and then feed it back into the system and say, hey, this happened because of these issues? Or do you even maybe look at the records and say, hey, we actually could have caught something like that?
Yeah. So the short answer is yes, but we don't look at it and feed it back in the system. That's what the system learns.
I see.
The system looks for which behaviors correlate to claim. And it turns out that not only is behavior a better correlation, it's also a causation factor. So hey, people that drive too fast in their cars have accidents. People that sail in shallow waters run aground. So what you can see is you can actually see the behaviors that lead up to claims. So it means that if you see these behaviors happening before the claims happen, you have a chance to do something about it. Do you ever remember that Tom Cruise film, Minority Report? his pre-crime. It's exactly the same principle as that. You just don't have to dress up in leather and jump out of helicopters. If you want to do that, we're fine.
Do you keep track of like the captains? Like, is Captain John Smith, a more dangerous pilot? Like with auto, the car is agnostic. It's safer or more dangerous depending on who's piloting it.
That's correct. So we absolutely do have access to some of that information, but not all of it. Most of it is around the asset itself, as opposed to going down into the crewing information. That's really difficult information to get, and it's obviously sensitive for a whole bunch of reasons.
Mm-hmm. Right.
Mm-hmm. But we live in a strange time. So if you look at one of the accidents recently, where one of the ships ran aground. This is a ship that had all of the basic navigation, the advanced navigation systems. And when you look at, why did it run aground? Well, it ran aground because the crew wanted to make a phone call, and they needed to get closer to the coast so they could pick up a mobile signal. So they ignored all the systems and sailed a bit too close to the coast. So it's difficult to legislate for those sorts of things. But what we do see is our customers using the data to try and head off those claims, to say, hey, listen, you're about to go into a port where we've seen these sorts of incidents. I'm going to give you the information ahead of you getting there.
So my next question has as much to do with my ignorance about brokers as it does about learning about your product. And that is, it's clear to me, completely understandable why this matters to carriers and how important it would be to a carrier.
Yep.
But why do brokers? How does a broker use your product? Or is it in the same way?
Yeah, it's a variation on the theme, as it were. The neat thing about the technology is, from a broker perspective, especially from a carrier perspective, everything that the broker used to declare to you can now be observed. So when they used to say, hey, listen, a really safe fleet, they sail in coastal water, do X, Y, and Z, they don't go to these areas, they do this. You don't even need to tell me that anymore because I can see that. So it's changed the broking dynamic, because now the broker can go engage with their client, so the insured, and say, this is what the system will tell you about it. So if I try to represent anything else other than this, the market's going to know about it because they already can see your behavior. So it changes the dialogue with their customers. So now they can say, hey, listen, compared to your peers, you have a higher accident rate, and it's because you have these behaviors. So now that the brokers are able to sit with them in advance and say, well, I tell you what, let's implement these services and these mitigating sets of consultings or services or whichever, to head that off. So when I take your risk into the market, I can say, hey, listen, we know that they have these challenges. We all know that. Mm-hmm. But what we've done is we've applied these mitigating set of actions.
That's really cool. So it helps them on kind of an advisory level to be more better representative of them as they're finding underwriting.
You're absolutely right. This is to be more proactive, and it actually generates. They're going to make fees out of the broker, but this generates additional fees for the broker as well.
That's amazing. I want to talk about climate change real quick. We started off the podcast talking about how weather in different cities is different than it was, years ago. Like here in Texas, we actually get ice now, and every year it seems like we get ice when we used to never get ice. But how does the machine you have created, right? This AI machine learning device, how does it take into account climate change, which is so huge when storms are stronger than they've ever been, winds are stronger, water levels are up and down. What are you doing to take into account climate change?
Sure. So there's two or three areas and two or three ways that it affects us, and we can come on to property as well and what that means. But from a marine perspective, this means that a passage like the Northwest Passage going effectively over the top of the planet instead of going around the middle of it, if you like. Yeah. From a sailing route, that means that new passages are opening up, and so the risks there are unknown. If you break down in some of these places, there's no infrastructure to help you out, because they're not established sort of sea routes. So the system's having to learn what the impact of climate is as it affects things like sailing routes and some of the infrastructure services. That's a different market altogether.
Right.
So we're seeing, to your exact point, you have ice storms down in Texas. You see the hurricane seasons starting earlier and being more severe in North America. And we're seeing that I think it was in 2021. The natural disasters were on the rise across the US. I think 1 in 10 homes was affected in 2021, and that creates a huge burden on insurance companies, and specifically on their claims teams to be able to cope with that. So what we're looking at is in the technology is, can we use tech to help solve this problem on behalf of both the insured and the carriers?
Okay.
And we've developed some technology that uses, again, AI and machine learning to interpret satellite images to understand and assess damage after these cat events. So whilst we can't control the cat events clearly, but what we can do is help there be a better, more timely response. So if you're able to assess, as we do, we're able to assess a storm's come through, which properties have been damaged, what's the level of damage, and get on top of those claims immediately.
So your tool must be finding insights almost first, ahead of when they're clearly apparent, and particularly in something like climate change, which is occurring as we speak, right? Climate change is in the process of kind of rolling out, if you will. We can't sit here now and say, boy, I wonder what this is going to look like 400 years from now. We're concerned about what it's going to look like 15 years from now. We're in the middle of it. And so is your tool digesting all this data and information and coming up with insights almost ahead of the game, certainly ahead of the people?
Yeah, so there are tools that will have a sort of prospective view on where storms might come in the future. That's not us. We're solving in the case of property, we're solving a very immediate problem, which is, as an insurer, if you insure properties and a storm comes through, I want to be able to serve the policyholders better. I want to be able to get on top of those claims before the policyholders contact me. I want to be able to get on there before a contractor has maybe got them to assign the benefits to them, so they don't get claims inflation. So what we're doing is using satellite imagery and other aerial imagery to assess, hey, a hurricane came through this town. I want to know there are 50,000 homes in this town. I want to know which ones of those homes are damaged so I can do something about that. So that's what this tool is doing, is within 24 hours, it's making that assessment.
What about markets? So you're currently over in the England market, right? Over in Europe there a little bit. Yep. What other markets are you currently serving?
So we're trying to be a global organization. Clearly, we're a relatively small UK company. Let's say the property side of our business came through an acquisition of a Boston-based company called Spark Insights. Okay. And that we've really used Spark that's now called Quest is our property product brand name. So it's called Quest Property. So we're using that as our springboard into the US market. Although I have to say most of our customers are international anyhow.
Right.
We've been selling out of London into the US and into Asia. So I would say about 25 customers, probably 5 to 10 of them operate on an international basis.
So is the US property market a goal for you to actually sell your product to the insureds who really, the carriers who really focus on the property market in the US?
It absolutely is. You haven't quite got an exclusive on hurricanes, but you do seem to have a majority vote on them these days.
We do. They seem to enjoy our coast.
Mm-hmm.
I think that's really, really big. What really interests me was how you said it goes in and it starts selecting, all these people want rates, and your technology can say, hey, out of these 100, these are the ones you need to look at first. Yep. And these are the ones that we think that you ought to quote. And I think for a lot of the startups, a lot of our listeners are InsureTechs, and they're working with carriers to get out there, and they're always looking for tools. So I think this is a really impressive company, if you ask me.
Well, I would agree wholeheartedly. But I think that's
no doubt.
No modesty there. If you look into the MGA market now, and I think you have to have some magic in there. You have to to be an MGA these days. You have to have some mastery of data, and you have to have a differentiating view. And our pitch to the MGAs is that we provide that analytics capability, and all the statutory reporting you need to make on the side of it as well. So
that's nice.
Yeah.
Do you have MGAs or come to you and say, you know what, we're interested in this small little piece of the market. Can you help us to gain insight there?
We absolutely do. So we have companies come to us that want to say, for example, write some innovative cargo, and can we use your data and analytics to do that? So yes, we absolutely do. We believe that we facilitate growth of markets.
I had written down a note here about ethical AI, about why embracing ethical AI is critical for insureds. What is ethical AI?
If you look at AI for something like facial recognition, you need to make sure that there's no bias in it.
I see.
In our market, whenever you use AI or machine learning, if I always cut to the conversation with the regulator. If at the end of the year the regulator comes to you and says, "Hey, why did you write that risk at that price?" If your answer is because the algorithm told me to, you have a whole host of problems. Yeah. Mm-hmm. So what you actually need is ethical and explainable AI. You need to understand why did the algorithm get to the decision that it did? Yeah. What were the factors that it took into consideration, and can it be explainable? So there's a lot of talk about black box algorithms and those sorts of things. And I'm really not a fan of that. So we invested heavily to make sure that everything our algorithm did was explainable. So you as an underwriter, you understand why that price is that price. What are the factors that get there? And so when you look at some of the AI, it doesn't have that explainability. And so I don't think that is ethical to use at that point. And you're not going to get past some of the state regulators, especially if you go into things like motor, etc. You need to be able to understand it. So I think there's a lot of work a lot of the tech companies have got to do to make sure that their AI is explainable, ethical, dependable, and doesn't create these sort of random corner cases that that just doesn't seem to make any sense.
Absolutely.
Yeah, I mean, we've seen that certainly in our country. Most easily seen in social media, or certainly also in the popular media. I mean, social media is still trying to get their arms around it, I think, right? And so, why would that be any different for you in your work?
No, I don't think it is any different. And if you're an underwriter, well, at the end of the day, week, year, whichever, you're going to be held accountable to your results. So you need to know why decisions are being made.
I thought it understood, but it clearly didn't.
Well, but yeah, you're absolutely right. But the irony is, if you go to underwriters and say, "Hey, why did you price it that way?" Yeah, these days without these tools, they'll go, "What do you know? I had a gut feel."
Yeah, I felt good about it.
Yeah, it felt like a good risk. What does that mean? Yeah, so that can't. There's a bias in everybody. Yeah. And so that just doesn't work. But when it comes to applying algorithms, we're held to a higher standard than the individuals.
So, are you using this in the auto market at all? I know you primarily are in ocean-going vessels. Are you using in the auto market? Because here in the United States, I'm sure around the world, telematics has grown tremendously. Yep. And we've actually had people on the podcast who've said that the problem with telematics is that they're not necessarily effective in properly rating a policy. Are you guys working in that? And can you talk about that for a minute?
Sure. So we do work in the automotive area, but we only work in commercial fleets. Mm-hmm. We had a dabble into personal lines, but it wasn't really a market. It's a very, very busy market.
Mm-hmm. Sure.
So we work in commercial fleets again to understand the behavior of the trucks. And how that correlates to risk and claims, etc. Mm-hmm. The principles move from one to the other quite seamlessly.
Mm-hmm. Sure.
Is it hard to break into the London market, who's been doing insurance for so many centuries? Is it hard to go in there and say, "Hey, we have new data, we have a new way to think about it," or is the market hungry for this? Are they looking to be better at what they do?
I got asked the question once did I ever meet any resistance when introducing this technology into the London market? My answer to that was resistance, not much, no. Outright rejection, quite a lot.
100%. Right.
Yeah. It was literally, we just bounced straight out, And I tell the story, my first presentation was called The End of Insurance back as you know it. Yeah.
Oh, yeah.
I didn't get invited back from that one. The second one was
it was indeed it was the end of your insurance.
Yeah, absolutely. I thought I need more technology in this pitch. Obviously, the second one was called robo underwriting. didn't get invited back from that one either.
No, I would not think so.
But you said, underwriters for a long time, I mean, had a gut feeling that this was a good risk. I mean, at the end of the day, they had to kind of look at all the data themselves and.
Absolutely.
Yeah, but it wasn't a very unprofitable world, right? It's been pretty profitable. But I think with the changes that the world has gone through with all the new technologies, the gut feeling, it's not the same, right? You don't have the chip cells going down the same path. Everything's different. There's so many variables.
You're spot on. So the breakthrough for us came, actually, I read what was quite an old book called Unlimited Wealth by a guy called Paul Zane Pilzer. He's a US economist. And he talked about a thing called a ready-to-implement technology. The classic example of a ready-to-implement technology is a word processor. Just lift your fingers off your typewriter. I'm going to put a word processor underneath your fingers, type the same way, you get immediate benefits. You can want 2 copies, I can print it. You want to make a mistake, you can change it. Yeah. So what we realized that what we needed to do was to just slot our technology into the working process and the working practice of the market, right. Which meant we needed to, I was going to say dumb down, but we needed to slow down some of the technology a bit and say, actually, you still can negotiate the deal the same way. You can still broker it the same way. But what we're going to do is we're going to give you more insight and more knowledge and more explanation about that risk than you ever had. So
you had to make it adoptable.
Absolutely. Absolutely. It's not about what's technically possible. It's what's about adoptable. And so when we think about a broke, when about being place business, in a half-hour conversation, the first 15 minutes is, hey, Bill, how are you? How's your wife? Have you still got that place in France? And then tell me about this risk. Now it's, hey, Bill, how are you? How's your wife? Have you still got the place in France? And then it's, hey, listen, I've seen that business you put by me. Can you tell me why they've had a trading pattern change in the last 3 years? So it changes the second half of the conversation, but not the first half. So they're still very interactive. They can still negotiate the deal, but they get a ton more insight, a ton more value, with almost no effort at all. And that made a huge difference.
Andy, I want to ask you about the future with this and where you see it all going. Is this something that is? I mean, obviously, it's very important, and you think it's very important. But I mean, how do you look at that out as you view out on the industry and its importance, its inevitability for the future?
Sure. So we worked with a large consulting firm, and we created a 2x2, which had capital effectiveness on one axis and operating efficiency on the other. And when I went to the bottom left of that 2x2, I ended up with today's market. And the future market, which is the top right, for me was all risk is going to be algorithmically assessed and it's going to be digitally traded. I've pretty hardened in my belief there. I developed my pithy phrase that in the future there'll be 2 types of insurer. There'll be those that use all of this data and all the algorithms to make better decisions, and then there will be those that used to exist. The point being is you can choose, you have a few choices to make as a carrier. You can choose to like this or not like it. You can choose to adopt it or not adopt it. But you can't choose for it to happen or not happen. That's not in your gift, that decision. So the only question you've got is, do I adopt it early and maybe a bit too soon? It might cost me a bit too much money, or do I leave it late and risk the entire company? But the market is going digital. The market is got way too much data, and you can't scale it manually. So this is not an optional change. It's the only decision you have to make is when you want to make this shift.
Well, that must be good to be in a provider of something that is increasing in its ubiquitousness, if you will. Right? I mean, it's everywhere, and it needs to be everywhere.
Absolutely, yeah. It does need to be everywhere. And, it's good to one of our earlier points is we're living in a world where massive amounts of data is coming together. And you just can't process it manually. That's a losing battle.
It's going to help people make more money, but is it going to help make the world a better place?
It's not better, So we live in a world where something goes wrong, we need to blame someone.
100%. Welcome to America. I mean, that's how it is here. There's no such thing as an accident.
No, insurance is an essential industry now. And I think that the world of data is opening up massive opportunities for insurance and the insurance product. I'm really excited about it. It's much the same as, you think what happened, that all of this data and technology came together in the gambling industry. They created in-play betting. So Tiger Woods teed off this morning for the Masters. I can now place a bet. Is he going to put this next shot in the sand or not, or on the green? Yeah. Mm-hmm. Nobody invented betting. Nobody invented calculation of odds, etc. But the technology facilitated new bets, effectively, that could be placed and made money out of. This same data is having the effect on the insurance industry. Is the insights are going to create new insurance products that may not be annual risks. They may not be annual policies. But it's creating new insights to what's going on in the world. And people want, as you say, people want to blame someone. It's said that 90% of the world's risk is uninsured. It's because we haven't created the products to cover it yet. So there's a massive opportunity on with this technology and data to create new and exciting and innovative insurance products.
Fascinating.
So I'm really, really excited about it.
Let me just ask you as we wrap this up, do you have a U.S. office or would people reach you through your London office?
We have an office out in Boston, so you can reach us out of there. You can reach me just with a simple. The great thing about being a founder is I get an easy email address, Andy@Concirrus.com. It's the easiest one ever. Yeah, so you can
easiest one ever.
Yeah. You can find your way to us there. But no, we welcome all challenges. We've had companies call us up and say, "Hey, listen, can you help us with this area?" I'm like, "Yeah, you tell me what data you'd like to know. We've always found a way to get it."
Unfortunately, we're out of time, but there's so many parts and pieces of your company and what you do that we haven't even covered yet today. And so maybe at some point in the future, as things continue to develop, we'd love to have you back and talk about it some more. We haven't even really talked about how you get your hands on all that data.
No worries. So we'll do a sequel. Sequels are always better, aren't they? Yeah.
Well, they make more money.
Yeah, there you go. Yeah.
Thanks so much for being with us. Fascinating company, fascinating work. And for Lee and I, honestly, one of the best parts of doing this podcast is just like today, like where we learn whole new things about whole different things that are going on than where we spend our time for a living. And so we're very grateful and really glad that this happened. Thanks, Andy.
It's a genuine pleasure. Thank you.
Thank you, Andy.
Lee, that was the kind of episode that we kind of built this podcast for, right?
It was technology in insurance that many people don't even know about, but it's a game-changing technology that insureds around the world are using. That's exactly what we built this podcast for.
Right. And applied to a market that we don't usually talk about or work in or have much visibility to. Fascinating, shipping and whatnot.
I agree.
Very, very interesting.
And it is making the news here recently. We've heard about a lot of ships that have had fires or wrecks.
Correct.
All of us are in problems now because of the Suez Canal, and so it really does affect us. So insurance in that industry is a big deal, and I'm glad that we were able to talk to Andy.
And that was one of the things that I wanted to ask him. I wanted to ask him, that's a really interesting. How many ships are there in the world out there running around? Not little boats like passenger
actual cargo
things,
vessels,
but like cargo big boats, and
more than we think.
So we'll put it out there. If you are one of our great listeners and you know how many ocean-going vessels are out there floating around in general, and you have the answer, email it to us at F&O InsureTech. And if you're the first person to do that, and you're right, we have a special F&O surprise for you.
Yes, we do.
Mm-hmm. That's right.
That's exciting.
Right. Can't tell you what it is because we don't know yet. But
I'm telling you right now, Al, it doesn't count. Don't do it, Al.
Yeah, Al. No employee.
No employee gift. Yeah.
Right. Thank you, Andy Yeoman. What a pleasure to have you. And thank you to everybody out there. And thank you to the people at Concirrus who put Andy up to this. And we thank you, as always, for being our loyal listeners. And so we'll say to you this.
Goodbye, everybody.